Hey guys, welcome to this week's stock market recap. I'm Robert Montez with Nexus Wealth Management. Today we're going to be covering what helped the market, what hurt the market, and your key takeaways for the week of November 10th through the 14th, 2025. So overall, guys, it was a mixed week, which started out rocky, but then finished strong. We saw all the major indices pretty much at a standstill, with the S&P finishing up 0.1%, the Dow rose a solid 0.3%, and the NASDAQ was down about 0.5%. So this proved once again that markets can regroup even when things are a little bit bumpy, and that not all indices move the same. Now, as far as positive factors, there were a couple of things that really stood out. First, the big one, the end to the government shutdown. I know you guys were probably happy to see this as well, but this unlocked some key economic data. It boosted confidence in job markets and allowed us to get back to more business as usual. Second, we saw some standout corporate earnings from companies like Cisco, Disney, and Tencent. These showed that businesses are still delivering strong results. They're creating some bright spots in our economy and just showing off better opportunities for American families when it comes to growth in different job industries. Third, we did see a late week rebound in tech stocks after being down earlier in the week. We've seen the massive impact that tech stocks have on our indices as a whole, and it's something that we're constantly paying attention to because they make up so much of the index. Now, as far as pullbacks, there were a couple of different things. First, as I mentioned just a second ago, tech stocks were pulling back earlier in the week. This is a huge deal because when you see that 9 of the top 10 companies on the S&P 500 are tech-related industries, and those 10 companies make up about 40% of the index, when tech's doing good or bad, it's definitely going to impact our market as a whole. We also saw some renewed chatter around tariffs, which is creating a bit of uncertainty for trade-sensitive areas, and it nudged some sectors lower. But history has shown that these talks often lead to balanced outcomes that support overall economic stability. Finally, we've been talking about this. The concerns over AI valuations has added a few bumps, and that was mostly in the midweek, sparking some caution. This is just one of those things that people are encouraging you to maintain some discipline on, maintain some diversification, because again, if those valuations pull back and it impacts the market negatively, it will have a major effect if you're just indexing passive. Guys, as someone who's also juggling work, family, life in general, here's my key takeaways for this week. One, with the end to the shutdown easing job worries, now is a great time to review your emergency fund. You want to aim to cover about 3 to 6 months of expenses off of what's known as your reduced essential expenses. This is typically going to be about 65% of your of your take-home income. And second, amid earnings highlights and valuation chats, consider a quick diversification check on your investments. Really take a look at what you own and how much of it is diversified into different sectors. This is something that's very important, especially if you're indexing, because like we were just talking about, tech makes up so much of what we see. Guys, regardless of if you're a busy professional, you're a mom who's maybe juggling career, family, finances, or perhaps you own a small business and you're looking for a fresh perspective on your 401k or your wealth strategy in general, don't hesitate to use this as a value-added resource. We are happy to help. Would love to chat with you about what you're doing and see if we can help you improve in any way, shape, or form.